everybody. Welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had an absolutely amazing trading day. It is Monday, the 20th of November. Sorry I'm out a bit late. I will tell you, I was playing a little bit of golf today, and I'm never going to apologize for playing a little round of golf. For those of you that are new to the channel, we do the same thing each and every day. We look at the markets from a technical perspective, and we leave our lines on the charts. That's the important thing to consider, is that we leave our lines on the charts as our trades set up so that you can see what we're looking at. So let's go ahead and get started. We had a little bit of movement today. Not a whole bunch, but enough for us to take advantage of. So here in the S&P, now this ES level, we went through this level today, and then came back down into it. I will say this about the S&P level. If I trim this down to a 15-minute chart, we had this little time period where price came up into here and then started to go down and then came back up and then came back down. If you are on the Twitter feed, for those of you that follow me on Twitter, if you don't follow me on Twitter, do me a favor. If you get a chance, try to do, even if you don't have a Twitter account, open one up. Follow me on Twitter at _Chuck Fulkerson. At Chuck _ Fulkerson. And I try to post up some tweets throughout the day of adjustments that we make to the trades. And this was one example of which I did not like the arrival into the level. And so since I didn't like the arrival into the level, we were moving our stops to lock in a little bit of profit, and that was literally right as it was just chopping around in the S&P. And we posted that simply to make sure that everybody is kind of aware of what's happening. Because this level, though it looks like a losing position, is one that I managed actually pretty tightly to kind of keep it from being that way. And I try to always put those in the Twitter feed so that you can see exactly what we're looking at when we do see it. So now the S&P didn't perform very well. Our Nasdaq level, however, worked out pretty well as price came into the Nasdaq level and then started to sell off and got all the way down to 63.05 before then rallying back up and kind of ending the day a bit lower than kind of where we started. So while the S&P level, you're stopped out for either a small loss or a small profit or a break even, you are profitable in the Nasdaq trade. And those are kind of what we're looking to see, is when those kind of things occur. Crude oil. Price in crude oil, we still don't have anything in here that excites me much about crude. There's going to be a little level that forms right in here. I'm not going to put it on my I'm not going to put it up on my charts as I don't feel confident enough in it completely. But for those of you that are a little bit more risk aware and you more risk tolerant, you can take this little bit of fair price action right in here below that pivot low, right below that pivot high. Gold. So gold, we had talked about last week, and I talked about it yesterday on the video, the one that I did that we released last night. Gold, we hit the very top of that level, screamed out of that zone. So gold worked out for a great trade. Let me know in the comments below if you're still in the trade. It's always good to hear when I have some of you that are still in these positions. But gold is continuing its move, and it's good to see gold kind of making that continuous run. Next, let's go take a look at our bond markets. So 10-year Treasury note, our bond markets, what we have on our 10-year Treasury is we did create a little bit of an area here that may be valuable later on. So what I'm going to do is I'm going to highlight this area right through here. And this came up earlier today where we had that little bit of drop, a little bit of a fair price area, and then price came up into here. I really like these upper wicks. That tells me that price tried to get higher and was unable really to do so. So those upper wick areas, I think, become very important going forward in this thing. If I look at this on, say, a 15-minute chart, we'll be able to see really where it fell off from that level. So on a small time frame, you might find another reversal in through here. I'm not gonna mark it off, but I still think that it could work out. It's not one that I'm gonna take. Doesn't quite fit on my risk parameters, but it is indeed one that you may be able to take if it fits your rules and what you're willing to do. In the Aussie, so the Aussie, we've taken our stop. We've moved it down now 3 times. There's no reason to move it again. We're actually setting up for another potential breakdown out of there. So there's really nothing to look at yet at the Aussie. In the euro, so the euro today also put in a fair price area in a very similar location to the one that we saw in the bonds. So this fair price area that I would look at in the euro would be this area all the way up and through here. So I'm going to highlight this, kind of keep an eye on this one as a potential, but I'm going to change the lines to a dashed line. And the reason, remember, a dashed line means we need price to come into this range and then trade out of this area of resistance before we would want to get short. Last and certainly not least would be the Canadian dollar. And the Canadian dollar is continuing its downward trend. I'd like to get a rally back up into a good small time frame level. Nothing on here that I'm gonna mark off because even when I go to a 15-minute, you might have this little area right here and even this pivot. But I'm going to leave those alone. I'd actually rather trade that kind of in a candle-to-candle method, which I'll cover a bit later tonight for those of you that are going to be on the live video. Last but certainly not least, nat gas price is nowhere near our level. The Great British Pound, we are in our upward trend, and so I think that trend's going to continue. So if you want to continue to kind of hop on this, we're getting lower swing highs the whole way up. I am a little bit concerned because we've got weakening momentum with our lower swing highs here, even though I've got higher swing lows. These two lower swing highs do somewhat concern me, although I had lower swing highs here as well. So just keep an eye on it. Japanese yen, that level's working out brilliantly, which I talked about earlier today in the Twitter feed. I wasn't so sure about it last night, so we had said, let's take our stop and move it down to break even. And then price never came back into that area, and it's continuing to rock. So at this point, you may want to lock in some profits or maybe move your stop down to lock in some more. But it is indeed rolling away. So thanks so much for joining us on our session today. For those of you that didn't hear our video yesterday, at 9 o'clock Eastern, we're going to be doing a live video on this candle-to-candle trading. I've had a lot of people ask me about it, and I want to talk a little bit about it on the live session today. So if you don't follow us live, follow me live on Twitter at Chuck_Fulkerson. Actually, I think we do this on the company page at IIE Financial, and then also maybe even YouTube Live. So thanks so much, everybody. And if you have any questions, feel free to reach out. I will talk to you soon. See you.